Thank you. It's good to be with everyone. Before going over the quarter, I want to thank all our team members for continuing to bring tremendous focus and intensity to Gamestop's mission. We continue to see a customer-first culture taking hold throughout our stores, fulfillment centers, and corporate offices. Maintaining this emphasis on the customer will remain key as we work to grow across categories and new areas. During the quarter, we focused on expanding our selection, accelerating delivery speeds, and improving the customer experience. We also made long-term investments in our infrastructure, talent, and technology. We believe our emphasis on the long term is positioning us to build what will ultimately become a much larger business relative to where we are in 2021. We've also been exploring emerging opportunities in blockchain, NFTs, and Web 3.0 gaming. With this context in mind, here are a few recent initiatives of note. We continued growing our catalog by adding new products across consumer electronics, PC gaming, and other categories with significant addressable markets. Some of the brands we've established new and expanded relationships with include Samsung, LG, Razer, Vizio, Logitech, and Asus, just to name a few. Sales attributable to these new and expanded brand relationships helped drive growth in the quarter. We also began implementing new assortment strategies within our stores, including an expansion of PC gaming merchandise across approximately 60% of U.S. locations. With respect to hiring, we kept adding talent across the organization, including specialists with experience in e-commerce, UI, UX, blockchain, operations, and supply chain. Over the course of 2021, we have made more than 200 senior hires from some of the top technology companies. We also recently added a new office in Seattle and have identified an office location in Boston, positioning us within two tech hubs with strong local talent markets. Having footprints in these cities will help us attract and retain tech-focused teams with expertise in e-commerce and other areas. Shifting gears to our fulfillment network, we've started shipping orders from Reno, Nevada, while increasing shipments from York, Pennsylvania. Our expanded network is continuing to help us improve shipping times to customers across the U.S. Additionally, we recently announced a plan to hire up to 500 associates at our new customer care facility in South Florida. The facility, which is now operational, will be a key part of our new U.S.-based customer care operation. Lastly, we further strengthened our financial position by securing a new $500 million ABL facility, which closed early in November and includes improved liquidity and terms. The facility provides for reduced borrowing costs, lighter covenants, and more flexibility. Let me now turn to our financial results for the quarter. Net sales increased 29.1% to just under $1.3 billion, compared to just over $1 billion during the same period in 2020. As indicated in the past, long-term revenue growth is the primary metric by which we believe stockholders should assess our execution. SG&A was $421.5 million, or 32.5% of sales, compared to $360.4 million, or 35.9% of sales in last year's third quarter. We reported a net loss of $105.4 million, or $1.39 per diluted share, compared to a net loss of $18.8 million, or loss per diluted share of 29 cents in the prior year third quarter. There were no one-time transformation, transaction, or related costs during the period. Turning to the balance sheet, we ended the quarter with cash and cash equivalents of over $1.4 billion, nearly $1 billion higher than the end of the third quarter last year. We continue to maintain a sizable cash position, even while front-loading investments in inventory to meet heightened demand and mitigate the full impact of global supply chain issues. At the end of the quarter, we had no borrowings under our ABL facility and no debt other than a $46.2 million low-interest unsecured term loan associated with the French government's response to COVID-19. Total liabilities compared to the third quarter of last year were down $262.1 million. Capital expenditures for the quarter were $12.5 million, bringing year-to-date CapEx to $40.7 million. We anticipate CapEx will continue to increase as we make pragmatic investments in our infrastructure and tech. In the third quarter, cash flow from operations was an outflow of $293.7 million compared to an outflow of $184.6 million during the same period last year. In order to meet customer demand and drive sales growth amidst the tight supply chain, we grew our inventory to $1.14 billion as of the close of the quarter, compared to $861 million at the close of the prior year's third quarter. In terms of our outlook, we're not providing formal guidance at this time. Before wrapping up, I do want to quickly reinforce some key points about our go-forward operating philosophy. Our emphasis on the top line stems from our leadership team's significant e-commerce experience and belief that revenue growth is critical. We believe revenue growth will translate to scale and market leadership. And from there, scale and market leadership will translate to greater free cash flows over time. Our focus on the long term means we will continuously prioritize growth and market leadership over short-term margins. I'll leave it there for this quarter. As always, we appreciate all the enthusiasm and support from our customers, employees, and stockholders who we believe are the best in the world. Thank you.
Is there going to be questions?
This concludes today's conference.
That's
you may
it?
disconnect your lines at this time. Thank you
No
for your
guidance, no
participation.
questions? What the F? Oh my gosh, that was horrible. No, explanation why the EPS was so horrible? I'm looking at these numbers. Net sales up 300 million, sorry. Cost of sales not hugely out of line for an increase in net sales like that. Operating loss barely moved up. Why did the loss per share go from 29 cents to $1.39? Good Lord. Gary, are you here? Did I buy the dip? No, I don't have after hours trading. We'll see what it looks like in the morning. Man. No surprise announcement, no news, no questions, no guidance. That's not bullish for helping this price recover back to 175 tomorrow. Oh, it said no questions in the beginning. Well, guys, do you have any questions for me? I don't have much to say. I'm going to have to do a little digging later tonight when I have time and see if I can figure out why the earnings per share was such a huge loss. Takeaway is nets, sales were okay, revenues were okay. The earnings per share is really confusing to me. Net sales increase, cost of sales in line with what I'd expect. Basic loss per share went from 29 cents to $1.39. I'm going to need to look at more than a consolidated snapshot. So that will take me some time. And I can't really comment anymore until I understand how that happened. Maybe they shorted AMC. Oh boy. Well, I'll let you know tomorrow what I figure out. Or if you're in the Discord and I figure it out tonight, I will let you know. And we'll be talking about it a little more. I'm sure there'll be people covering this in depth on some specific GameStop channels. I've got to help Scarlett get the Christmas tree up or something this evening, so I'm going to be out of pocket for a couple hours, and we will catch up with you guys bright and early in the morning. Thanks for tuning in, man. I was hoping for more AMC 1 hour calls, or quite a contrast to this. Ludwig, should we transfer all of our GME to AMC? Too early to say, Ludwig. I do have faith in the GameStop management. I need to understand more what is going on with these numbers. Final closeout. It seems to have settled in the 163s. If you are interested in buying on the dips, just if, 144 is kind of the low, and the most recent low before that was right where we're at in after hours right now, back in July, around 163. And let's see, after the last earnings, here's the last earnings. They went down from 207 to 167, rallied all the way up to 255. So it's a grab bag, guys. Hard to say what's going to happen going forward with GME. We'll need to get some more information and let stuff filter out. I'm not doing anything new. I'll think about buying tomorrow, seeing on what depending on what the price action does. All right, that's it for GameStop. We will post more once I know more information. Peace out, guys. Right-handed salute. Hat tip to each one of you, and we will check.